Greetings, members, one and all of the Salivation Nation. Imagine, if you will, all of the different factors that make up the movement of gold and silver's price. Put them all together in a glass and stir it up. And what kind of cocktail do you have? Well, let's explore. It is one of a raging bull, at least right now. We have the second day of increased gold and silver prices. The moves today were not nearly as dramatic as yesterday, especially for silver. I highlighted mostly silver yesterday, but we're going to bring gold into the mix today as we talk about the prices, because gold has climbed fairly substantially as well. Right now, gold is up 1.5%. It's up $25.50 today. Over $1,727 as I record this video. Silver has comfortably made it up now over $21. Pretty amazing. $21.14 is where it is, up over 1.6%, climbing 34 cents. Platinum and palladium are also shining strong. In fact, both of those metals are rocking our world today. No question about that. Platinum is up over 3.7%, up $34 and $942. We may see $1,000 platinum again. Palladium is up over 4.75%, up $104 as I record this video. That's $2,424. We're going to talk mostly about gold and silver, but the gold to silver ratio, though, is narrowing to 82.04 right now as I record this video. So pretty impressive indeed. These metals are sitting comfortably right now. As you can see by this display, they look quite cozy there. I'm going to be referencing an article here from Kitco that talks about this. Jim Wyckoff talks about this as a bullish cocktail. That's right, a lot of different things that are driving gold and silver. But the one part of that cocktail is something that stackers of gold and silver in the physical form should celebrate. Yes, indeed. Another reason to be joyous for holding your gold and silver. We'll talk about that momentarily. Gold and silver prices are sharply higher in U.S. trading Tuesday. That's today, with gold scoring a 3-week high and silver a 3-month high. Bulls showed important follow-through buying strength after Monday's big gains to suggest still more upside for both metals in the near term. And so that is suggested, does not necessarily mean it's going to be reality. We can celebrate, we can have fun with this, if the prices are going up, unless you're a buyer, kind of like me. And then it's like bummer, you know, because we want the prices to be low so we can accumulate more. But regardless, we should not expect this to continue, at least for a heck of a long time. Sooner or later, this is going to kind of subside a bit. Typically, that's what happens during these big bull runs. Trading so far this week shows a sharply lower U.S. dollar index rallying crude oil prices, falling U.S. Treasury yields, and safe haven demand. That's right, that is the thing here. The dollar index rallying crude oil prices and falling U.S. Treasury yields. And that's the concoction. And with the cherry on top, that is safe haven demand. That is what we can celebrate, folks. That is factoring into the prices. Where typically, especially with silver, it's seen more or less as a as an industrial metal. But nonetheless, that is kind of where things are. Trading so far, so global stock markets were mostly firmer overnight. Markets in China and Hong Kong were closed for a holiday Tuesday. Indexes are solidly higher at midday. Follow-through strength from the solid gains posted Monday. Risk appetite has at least temporarily uptick earlier this week after weaker purchasing managers. PMIs for major economies, including U.S. on Monday, led to notions that the major central banks will start to decelerate the monetary policy tightening paces. And that is one of the things, as well as Credit Suisse, troubles of Credit Suisse, and that is kind of gauging kind of where things are at, and possibly even that the more of a continued bull run as we learn to find out what's happening here with Credit Suisse and with the major central banks may be starting to pivot. We don't know for sure if that's going to happen. The Eurozone reported that its producer price index was up 43.3% year on year, mainly due to soaring energy costs. However, excluding energy, the zone's August PPI was still up 14.5% from last year. The key outside markets saw the U.S. dollar index solidly lower on follow-through pressure from Monday's losses. NYMEX crude oil prices are higher and trading around $84.70 a barrel. Traders are awaiting an OPEC meeting coming up tomorrow that is expected to see cartel cut its collective oil production by at least 1 million barrels a day, a report said. That's a pretty big cut. And stay tuned for more on that, of how that can play a role in the prices of precious metals. Meantime, the yield on the 10-year U.S. Treasury note is falling and presently fetching 3.6%. Last week, the yield on the 10-year pushed very close to 4%. The most important data this week is Friday's employment situation report for September from the Labor Department. The key non-farm jobs number is expected to come in at 275,000. The August report showed non-farm jobs rise of 315,000. So we'll see. If it falls short, who knows? That could lead to potentially, if these numbers don't meet up to par, the Fed may be tempted to pivot. So we'll see how it plays out. Nonetheless, let's do a little bit of a technical analysis of what he's talking about here. December gold futures price has hit a 3-week high. Again today, the gold futures bears still have the overall near-term technical advantage. So the bears are still thinking that they're advantageous and we could see gold pull back a bit. But the bulls have momentum, and it appears a near-term market bottom is in place. A 6-week-old downtrend on the daily bar chart has been negated this week. Bulls' next upside price objective is to produce a close above solid resistance at 1,800. Bears' near-term downside price objective is pushing futures prices below solid technical support at September low of 1622. First resistance is seen at 1746.40 and then at 1750. First support is seen at 1725 and then at today's low, which was 1704. So there's where that is. So the bottom and the highs there, that range. Now, silver future prices hit this 3-month high today. Silver bulls have the overall near-term technical advantage and have momentum as opposed to where gold was. So that's a little different there. Silver bulls' next upside price objective is closing prices above solid technical resistance at $22.50. The next downside price objective for the bears is closing prices below solid support of $20. First resistance is seen at $21.50, then at $22. Next support is seen at $21, and then at today's low of $20.68. It's kind of where the market's open today. So we will see how that plays out. Very fascinating to see how these metals are moving. And again, as I cautioned in yesterday's video with silver, but the same really goes for gold, these metals could very well see a couple of days move upwards and then come crashing back down again, fairly dramatically, especially if we see more potential hawkish talk from the Fed, because I think some of this may be at the rumor of a pivot from the Fed, and I don't think that's going to happen personally, and maybe that's some of the bet and some of the safe haven drivers that are out there. So stay tuned, folks. We have been here before. We'll probably be here again with these wild dramatic moves. And just as I showed in an earlier video about the couple of different phases of price discovery for silver, which was really eye-opening. We're in this manic phase right now. And very, very quickly we could see the rug pulled out from underneath of us in terms of gold and silver prices. So that is something we got to be clued into, and we've got to have the fortitude to stick with it. Yes, indeed, to stick with gold and silver through these price increases and decreases. Radical spikes, radical shifts in the momentum for where silver is going and where gold is going. But one thing is for sure, no matter what happens in the day-to-day, the month-to-month, or the year-to-year, we know that silver and gold will do what they have always done and provide safe haven support for your portfolio, because they are money. Even though they're dormant right now, they're kind of asleep, essentially they do and have provided a store of value for thousands of years, and they will continue to do that. Yes, indeed. In fact, if you want to see an example of a store of value, and silver, especially as a monetary metal, I'll try to remember to post a link at the end screen of this video to a video that I did not too long ago showcasing a coin over 2,400 years old that is made up of silver. Yes, indeed. High-grade silver, too, in fact. So there you have it. There's where the metals are today. A cocktail of bulls, not just bisons, and not just this bell. Speaking of bells, that's on this coin right here, I would encourage you to hit that notification bell below so you can be apprised of the latest video that makes its way across your device. It's not always totally reliable, but the more people that press it, the better the chance that it'll work, and more people will get these notifications. And also I want to encourage you to press that like button as well too. It does help the channel. And I want to encourage you all to please rate, share, comment, and subscribe. I want to leave you with a little saying that I say in my live streams, and that is to keep your feet on the stars and keep reaching for the ground. And I want to extend a multitude of gratitude to you all.